Hello, this is China Gateway 360, and today we're unpacking the PBOC's July 16th move to expand offshore yuan liquidity.
Now, this policy shift isn't just some abstract macroeconomic theory. If you're a foreign company operating in China, this directly impacts your bottom line. We're talking your cost of capital, your FX hedging options, and your cross-border money movement. Basically, a deeper offshore yuan market hands your treasury team the exact tools they need to manage RMB exposure at a significantly lower cost.
Let's look at the three new policy pillars that make this happen.
The central bank has laid out a clear three-step framework. Step 1, expanding bilateral currency swap agreements with foreign central banks. Those already total over 3.5 trillion RMB, but the PBOC is now explicitly prioritizing ASEAN and the Middle East, which is exactly where trade settlement in yuan has been growing the fastest. Step 2 is all about predictability. Starting in Q3 2026, they're shifting away from an ad hoc approach to issue regular offshore central bank bills in Hong Kong, targeting 20 to 30 billion RMB every single quarter. And finally, Step 3 provides direct support for offshore yuan sovereign bonds to really build a deep market.
This brings us to the Panda bond sound. We're already seeing this infrastructure drive real action. Just look at the Ministry of Finance. They are sharply increasing their offshore sovereign bond targets, jumping from 55 billion RMB in 2025 to up to 100 billion in 2026. This is absolutely crucial to understand because these sovereign bonds set the definitive pricing benchmark for the entire offshore credit market. To put that action into a hard number, 94 billion RMB. That is the total volume of Panda bonds issued in just the first half of 2026. Remember, these are yuan-denominated bonds sold in China by foreign entities. Hitting 94 billion marks a massive 38% year-on-year surge. It's clear evidence that companies are aggressively taking advantage of this new liquidity.
So how should your team respond? Let's pivot to strategic actions for businesses.
Here is the exact playbook for foreign treasuries. First up, you need to reevaluate your RMB financing mix. If you're primarily borrowing in USD or euros, take a hard look and compare your weighted average cost of capital against Panda bonds. It might surprise you. Second, review your FX hedging strategy. With a much deeper 5-year CNH forward curve now available, relying solely on rolling forwards with a single bank just isn't the most efficient route anymore. And third, keep a very close watch on the ASEAN corridor for default yuan trade settlements. And just to put that last point about ASEAN into perspective, consider this: 44%. That's the year-on-year growth in cross-border yuan settlement in ASEAN for the first half of 2026 alone, hitting a staggering 2.1 trillion RMB.
So the final question you really have to ask yourself is this: is your treasury team fully leveraging this rapidly expanding offshore yuan ecosystem? Because this offshore push perfectly complements the PBOC's massive 760 billion yuan domestic credit expansion. And the opportunities are right there for the taking. This has been China Gateway 360, providing remote China market entry support built around execution.